us today from all over the world. As again, we have Hemant Kshirsargar from India, EY, Joseph Lim from Singapore, Head of Tribe Accelerator, Khalid from Bahrain, CEO of FinTech Bay, Nasser Zubairi from Luxembourg, CEO of Loft, Nuha Shakir, Egypt FinTech Association, and Paddy from iValley, San Francisco. Thank you all for joining us. And Paddy, thank you for making it, through the night to be here with us. As Shireen went through the FinTech trends and priorities for our region, and she basically summarized it through banking tech, payments, lending, and insurtech, in addition to RegTech and investment tech. It would be great to hear your views on what have you seen from your end or your particular regions. Maybe we can start with Nasser.
Hi, Raja. Thank you. Hi. I think speaking for Luxembourg specifically, and maybe Europe more broadly, the big emphasis is clearly on regulatory technologies and RegTech. Europe as a whole is suffering from a lot of pressure when it comes to compliance and new regulations. It's just a never-ending spiral of new documentation and reporting requirements from regulators, and banks and financial institutions are generally struggling to comply and to maintain margins. So are looking at all sorts of solutions for the back office, be it around KYC, AML, data management, AI for robot process automation to compile reports, and also around a number of sort of mutualized sort of activities where institutions come together to drive cost efficiency across the board. I think the other sector which has been quite predominant, particularly in Luxembourg, is around the securities industry and specifically blockchain and tokenization. As you may know, Luxembourg is the largest investment fund center outside of the US in the world, with 5 trillion assets under management. So securities investment funds are core to Luxembourg's GDP and its financial services center. With the trends going on and increasing investor interest in crypto assets, as well as new forms of assets being made accessible via tokens, in particular, Luxembourg has a big spurt in sustainable finance and green finance, where blockchain is seemingly playing quite an increasingly important role to be able to provide better access. We're seeing a lot of initiatives around institutions, but also a lot of startups creating tools to allow for tokenized investments.
Very interesting. Maybe if we cross over to Singapore, how familiar or different are the trends from Singapore as you see it, Joseph?
Yeah, thanks for the invitation, Raja. I think you can imagine, right, UAE and Singapore, quite similar markets. So everything that was mentioned earlier, BNPL, DLT-enabled payments, tech and capital markets, RegTech, pretty similar. Probably the only difference might be in approach, right? So I think probably, again, similar to the UAE, government here takes a pretty active approach. So in terms of putting in place regulations, putting in place frameworks, sandboxes where some of these fintechs can operate under a specific scope and basically be exempted from certain regulations during that period in the sandbox. So pretty similar. Again, Singapore is also trying to be the blockchain and crypto hub. So a lot of momentum pushing there. I think there was a recent study by Alibaba Cloud and the Singapore FinTech News that was the most up and coming sector. I think it took up 18% of all the companies, FinTech companies. So 18% of, I think, something like 400 plus FinTechs in Singapore were under the blockchain and cryptocurrency umbrella. So the next biggest one, I believe, was still payments. So pretty similar trends. Yeah.
Paddy, how would you say the trends from the US and from the Valley are?
Thanks, Raja, and it's great honor to be with everyone here, and thanks for the opportunity. So when we track FinTech, we kind of slice and look at it in kind of maybe 3 lenses. One is obviously the startup and the FinTech activity, and maybe the incumbent, the large banks, and even some regional banks. And as you know, in the US, there's kind of a lot of banks with different tiers, some community banks as well, who are very active now in innovation and fintech. And then, of course, the big tech play. So I kind of agree with Joseph's and Nasser's point that reg tech is significant, especially on the incumbent level. But if you look at the big tech, we're looking at more the coming up with platforms like Google and Amazon. Like obviously it's the cloud business which is driving it, but coming up with platforms for banks, be it large or be it small. So that's a noticeable trend that we're seeing there. Kind of their entry into kind of more financial services platform, if you will. On the fintech side, I think just to add to what maybe Joseph and Nasser mentioned, if you kind of step back, what's been happening in fintech is more around kind of customer journey distribution innovation for the last decade. What we see with the blockchain mentioned is kind of the manufacturing of the factory of financial services is changing. So obviously there's a lot of things going around with cryptocurrency and Bitcoin, and that kind of takes a lot of oxygen in the system, which is not really mainstream financial system. But with stable coins, CBDC, I know Singapore definitely has a lot of projects around that. In the US, there's not kind of a lot of activity around the CBDC or the central bank digital currency, but there are a lot of stable coin initiative. I think Visa did a pilot with crypto.com to accept kind of stable coins for treasury settlement. So we see a lot of trends in that. Kind of mainstream financial services, obviously a lot of fintechs are already doing that, but mainstream financial services innovating around kind of the whole digitization of financial services, of currency, securities, and everything kind of asset classes. So that I envision that we'll see a little bit more development in the coming couple of years.
Amazing, and I believe the big consumer market is also very lucrative for fintechs to really explore multiple opportunities of disruption through the US markets. Noha, thank you for joining us. Can you give us your view from Egypt?
Thank you very much, Raja, for having us. And of course, thank you to FinTech Hive for bringing us together. Always very interesting insights from the gentlemen so far, where the Egyptian market, actually the FinTech scene in particular, has shown a lot of resilience during the year 2020. And actually we've grown. And if you look at the investment side of the equation, for example, we've had 49 investments made in fintechs during the year 2020, which represents almost 50% growth than that of the numbers that were made in 2019. Of course, COVID has helped a lot with all the consumer behavior changes that are happening, but banks are looking into fintechs as partners and enablers to expand their footprint on the ground and to actually grow and expand into servicing other segments of the society they were never interested in serving before. So if you look at Mr. Bank, which is the second largest owned, governmentally owned bank in Egypt, has finalized a partnership with Paynas, a fintech startup, to actually gain some agility on the ground. They've also announced they started working on their digital bank, the very first in Egypt, that they are about to launch pretty soon. If you look at another partnership that was really interesting, of course, was Visa International coming together with Fawry. Fawry is Egypt's very first unicorn. They had an IPO this year, and Fawry is mainly within the payment scene. So if you look, we're expecting a couple of big IPOs as well. One is for eFinance, that is an e-payment platform that is owned by the government, and the other one is for Aman, which is another payment enabler on the ground that is privately owned. This year, we had a really interesting partnership as well with the Egyptian FinTech Association, working closely with the IFC to enable that entrepreneurship ecosystem on the ground. We're really excited about it. We've had the very first independent wallet provider this year as well, Rosidi. Prior to that, wallets were either owned and operated by banks or the 4 telecom operators operating here in Egypt. So this was a breakthrough. On the regulatory scene, we had the Central Bank of Egypt in 2020 enacting their FinTech, Banking and FinTech Act. The Financial Regulatory Authority had a similar FinTech law enacted. They've just passed it a couple of weeks ago that mainly covers all non-banking financial service providers. We are going to see crowdfunding platforms, peer-to-peer lending platforms working to support mainly the SME and MSME segments here in the country that present a huge opportunity. So the insurance as well, the insurtech sector is picking up. We had a very first hackathon this year. It was a partnership with GIZ, their initiative. We are working with partners currently on the ground to build that very first partnership between a large international insurtech insurance company and a couple of insurtechs on the ground that perhaps next time we meet, I'll be at liberty to announce. It's a growing market. It's a huge opportunity. 80+% of the investments that were made last year that has passed the $100 million investments made in fintechs actually came from international investors, only 20% from local ones. That reflects the appetite for international investors and them looking closely at the Egyptian market. 100 million Egyptians, I would say, underserved, a huge opportunity. Regulatory scene that is supportive, access to the right caliber on the ground that is relatively cheaper than other markets. Well, it's growing, and I'm happy to share that with you. Thank you very much.
Thank you, Noha. We'll come back with the focus on regulation in a minute, but we would like to hear the views from Khalid from Bahrain, one of the most progressive regulators in the region. Khalid, what would you say the trends in fintech has been in the last year?
Hi everyone. Thanks Raja for having us. We're happy to be on this panel with you all. I think you can break it down into a number of trends. Initially, what was already trending prior to the pandemic, I guess, steps put in place to grow other verticals that were growing anyway, and then as a result of the pandemic. So as of 2019, we mandated open banking in Bahrain to ensure that banks are sharing some of the key information about customers, of course, with consent for third parties to come and innovate on that data and offer solutions and better opportunities for consumers. So we've seen a lot of traction in that space now, looking at whether it be loan aggregation, personal finance management, BFM as well. That space is of course important to us because it's proof that obviously regulators are looking at enabling innovation and technology and future-proofing this industry. Similar to Dubai in a lot of ways, a lot of the topics raised in investment, robo-advisory, we're also seeing that. I think we had a little bit of a head start when it comes to crypto. We licensed the first crypto exchange in MENA, and we've continued to see that growth, continue to see more companies come into Bahrain looking for that type of licensing, and obviously to look at capturing this particular market. We've since seen another first for Bahrain. We've licensed the first Sharia compliant crypto exchange as well. And I think in general, obviously with the volatility going on in Bitcoin and other cryptos, the consumer behavior and appetite to invest into these types of assets, I think it's perfect timing to really consider this as a country and as an important vertical. I think one that's obviously trending with us now, and one that's going to continue to evolve, is tokenization, the tokenization of assets. And there's many use cases for that, even in the real estate market, in traditionally private sector as well. RegTech, I think, as a result of incumbents working with fintechs, and as a result of the pandemic, what we've seen is not just governments shifting their solutions digitally, but also incumbents being forced to and capitalizing on the opportunity to innovate as well, pushing their solutions or pushing their offering and their services digitally as well, which in a lot of ways requires that RegTech module to the life cycle, whether it be for onboarding, verification, and so on, connecting to government entities. And the credit bureau and things like that. So we've seen obviously a rise in that space. I think cyber is important as well, as we shift a lot of those services digitally. And then finally, I think just in general, we're seeing more and more specifically blockchain or distributed ledger technology and AI-based solutions deployed locally through the cloud, and obviously having data warehouses and data centers here helps with that. But that's definitely that was one of the key verticals and key infrastructure put in place a few years back now, 3-4 years ago, and we're starting to see the results of that come to fruition and solutions be deployed a lot more efficiently and at a cheaper cost, definitely to promote more innovation.
Thank you, Khaled. Very interesting. Hemant, would you please share the trends from India, please?
Thanks, Raja, for inviting me. From India, I think one word that could really sum up the entire key trend across the fintech ecosystem is that the Indian fintech ecosystem is now maturing. It has passed the phase where it was growing. It has entered a maturity phase. What that means is now you see more Series D, E, and F happening. That means earlier companies we were started about 5, 6, 7 years back are really matured. And what it is doing, it is building a cycle, because all these who are exiting, also the earlier fintech which are becoming unicorns now, have become super angels and have started their second ventures. So that means a lot of second time entrepreneurs are coming into play. That means even the quality of the company which are getting started is extremely high to a level that we are having seed rounds which are equivalent to Series A rounds which were happening some time back. So that was the maturity is extremely high. From trend perspective, I think it is very similar to other segments that we started with payments and lending, primarily focused on the retail side. But increasingly, we are moving towards the MSME and SME segment of the domain. And if you see, MSME segment in India is difficult, but the size is humongous. If you just look at the lending gap, it is $250 billion of MSME lending gap. That single market is a market large enough to accommodate so many players if they can come in really serve that. Over and above that, because the government has built a digital infra which is continuously reducing the cost of acquisition of the customer and the cost of reaching out to the customer, that means it is becoming far more easier to really start fintech companies. And I can really put my neck out there and say, if there was there was the right time to start a fintech company in India, it is right now, considering the size, the speed, the maturity of the regulator which is there. And if you see, we went through payments, lending, MSME. Now we are entering a platform stage, which is a good indication of maturity. That means the buyer is mature, the provider is mature. Now there is so much huge demand for players like Plaid, which was in US. There are multiple API players coming into picture, which are connecting manufacturers to distributors. And someone talked about the distribution side of innovation. That's where we are at now. So a lot of innovation trend wise which is happening is on the distribution layer, because if you look at the number, we are 80% banked population, but it's a 1.3 billion population. That means bank is just the bank account. Now it is going to the next stage of the entire marketing getting distributed into single pockets, and single pockets are accommodating unicorns in itself. So that's overall, if you have to paint a picture of India, I think it is of maturity, massive growth, and a lot of funding being available right now. I think fintech is the most funded segment within India right now across all sectors. I think one place where we lack is cryptocurrencies, because it's not looked at positively, at least by the regulator till now. So we have to see how we mature on crypto there.
That's an area that we're all looking at in terms of crypto and its growth. But while I'm with you, Hemant, the DIFC is regulated by the DFSA, the Dubai Financial Services Authority, and they support innovation financial services through their innovation program. And after the panel, we have Peter Smith, the director from the DFSA, talk about the regulatory framework for FinTech. In the DFC, we help them go through the sandbox, and as soon as they mature, if the regulations are not available, they progress through these regulations and then launch their products. And some other fintechs will tap into ready regulations as required. How is the regulation in India right now? What type of regulations are available for supporting the huge growth that you've just mentioned?
In fact, even there, the theme is of maturity. The approach that Indian regulator mostly have adopted is, if they see a new segment coming out, they are keeping it untouched. So they are allowing it to grow. Only at a moment it grows to a size that it becomes systemically important, they are coming up with regulation. And if you look at it, about 10 years back, payment gateways and aggregators started, the regulation have come now. But when there was no regulation, there was no restriction on their business, at least, right? That they were being allowed to do their business as they want to do. The regulation has come now. Similar is the picture when you go to lending, when you go to P2P lending. So the regulator is very supportive. The sandbox are already in place. We have 4 regulators, in fact. So one for insurance, one for banking, one for capital markets, and one for pension. And all of them have regulatory sandboxes in place. But I think the play that regulator has adopted, which is for any new segment, do not touch it until it becomes systemically important, and you have to protect your consumers. Only then the regulations comes into picture. That is playing well. If you look at neo banking as well, which is one of the largest growing areas in multiple countries, we do not have digital banking licenses yet, but the regulator is allowing new age companies to partner with existing banks to actually launch the neo banks across the segment. And I expect very soon, within a year or two, even India to come up with a digital banking license. So the approach has been constant, but is moving towards a mature phase where segment by segment, certain areas of fintech are coming under regulation from the regulators.
Thank you, Hemant. We also have the advisor for the governor of the Central Bank of UAE join us later and talk about the fintech regulation. The UAE has just announced, I think, 3 digital banks in the last quarter, which is really exciting and really gets a lot of excitement among the startups to know that these regulations are coming. Khalid, if I go back to you and my previous comment about the Bahrain being, central bank being one of the most progressive, because I meet a lot of startups who actually start in Bahrain because the regulatory framework supports innovation from seed stage, I would say. How would you describe the regulations and what has been the recent developments from your view?
Yeah, I think not unique to Bahrain. I think regulators everywhere, including in the UAE, have realized that their role is pivotal. Going back to my original point, and regulators have a much larger role to play at enabling innovation, but also understanding it and protecting both consumers and businesses when looking at new legislation, policies and licenses. I think in Bahrain, it's fair to say in many ways we were first movers at looking at fintech and saying that, in a sense, we look to create the infrastructure to enable that innovation from both a government and a central bank level, whether it be starting with our kind of cloud first policy, because of course that's important, our data privacy laws, looking at licensing for debt and equity, including Sharia compliant crowdfunding, crypto exchanges, of course, as we is important, robo advisory, and then obviously culminating, I guess, in the launch of the first regulatory sandbox in the region. But of course, even that process has matured. I think now the regulator obviously wants wants to look at new technologies, wants to look at, and particularly when we're talking about tokenization, I believe that will be important going forward. The sandbox itself, to ensure its scalability and that knowledge exchange is there. I believe they've launched a digital sandbox now as well to enable API connections, so and remote kind of testing with the regulator. But I think going forward, we really need to look at how do we ensure that we scale the opportunities for fintechs, as you said, Raja, to look at Bahrain, test their product, and then look at similar markets with similar characteristics, specifically in UAE and Saudi, and how do we promote, and our kind of role as hubs, how do we promote that cross-border kind of collaboration and seamless entry between markets? I think that's the biggest challenge, and will continue to be the biggest challenge, the concept of passporting. However, with that being said, I know that not just in Bahrain, but across the GCC, the sandbox kind of concept is evolving and is maturing in different regions. With Bahrain specifically, we're starting to see a good number of companies now graduate from that sandbox and go on to gain funding off the back of that, hire teams. We've worked with companies specifically on the crypto side that started with 4 people here in Bahrain, have now raised, their Series A, have gone from 4 to 100 people, and are now looking at the rest of the region. So we want to create a conducive environment to incubate those ideas, but then have an outlet, should we say, to larger markets, and hopefully look at further afield, such as into Singapore, into Luxembourg, into the States, even into India and Egypt, obviously as a large MENA market.
Thank you, Khaled. I'm curious to learn about the US innovation framework. Paddy, if we go back to you, if you notice in the region, we start investing time and money into technology once we know that it will be regulated and it will be okay to go to market, which is not very disruptive. And I know in the US, they probably have no clue about which regulator to connect with before developing the technology. It would be helpful to hear from you, since you're living that experience. How does the startups approach the technology innovation, especially in financial services? Do they wait for the regulation? Do they push for how does it happen?
Yeah, I think it's a good point. So a couple of points, right? So the US regulatory system, like you alluded, it's very fragmented. So you have the OCC, which is the regulator of the banks, the SEC, which is kind of regulator of capital markets. But within that, there's the CFTC, which regulates commodities and derivatives. And then all payments and things are at the state level. So there are 50 states now. There might be a 51 if you're following politics. So very fragmented regulations. But the regulations for payments, for banking, for capital markets are all in place. So when startups and fintechs innovate, they base it on existing laws and regulations. So they don't wait for, say, additional guidance if it's within kind of the regulatory framework. So it's a very market-driven process. The regulators do advise to kind of keep them in loop, especially if it's something new. For example, stable coins is a good example. So some companies were already kind of doing stable coins in a kind of safe environment, if you will. And the banking regulator came with guidelines as to how banks can participate as nodes, how they can use stable coins potentially as a payment pipe and things like that. But companies were already doing that, but doing that not in any kind of risky way within existing guidelines. I think it's a little different. I don't know all the regulatory system around the world, but I think fundamental difference is possibly they're single entities, so it's easier to deal with. That's one significant difference in the US. There's several entities, and you need to kind of navigate that with legal help. And two, the startups and the innovators don't so much wait for guidance. They kind of put forward what they want to do, what problems, or kind of a market-driven approach is how I best describe it.
Thank you, Patty. If we move, I mean, we cannot have this conversation without talking about the pandemic and how did the pandemic really affect the whole world, including digital transformation specifically in FinTech. If we go back to Nasser, would you please share with us how did the pandemic affect the FinTech community? How did it open opportunities? How did it eliminate opportunities from your view and experience?
Yeah, sure, Raja. I think just as every business at the beginning of sort of the first wave and the global lockdown last March, fintech firms in Luxembourg and across Europe were in a state of confusion. Many of the projects that they were working on, I mean, we focus very much so in Luxembourg on B2B, as dealing with fintechs, dealing with financial institutions. Many of these projects were put on hold or stopped as financial institutions quite rightly sort of focused on business continuity and their internal processes, shifting everything to a remote working basis. Then also likewise, with potential business development drying up, a lot of fintech firms were concerned about income, as well as fundraising and capital. Some of those were put on hold as well due to a lot of the uncertainty. And what we did first and foremost for all of our members and the fintechs in Luxembourg was try to very succinctly clarify all the aid schemes and state support that was available, of which there was a lot in Luxembourg, to make it clear to them what they were, what would be applicable to their businesses, how they could be supported through the process, offering our own support, in terms of holding their hands to ensure that they could navigate through the crisis. But then after a few months, once sort of operations of a lot of these large institutions had stabilized, what they also started finding, banks typically, that they needed fintech solutions in order to ensure their business continuity in the longer term and to continue operations. I mean, how could a bank go and collect a fax if they're not allowed into an office? And unfortunately, still financial institutions rely on faxes. How could a bank find or verify the identity of a client if they can't meet with them face to face and obtain a signature? How could they hold a physical board meeting, which is still required under most regulatory regimes in the European Union? And, this is where the focus on fintech really came in. In parallel, many of the CEOs of the financial institutions in Luxembourg were generally pleasantly surprised and excited by the agility that they saw their own institutions were capable of. Many of the excuses that we've heard over the years from large institutions is that we're slow, there's a lot of bureaucracy, procurement processes, any project that we do digitally in-house will take 2-3 years to implement. Yet within a matter of weeks, they had shifted from a physical model to a completely digital model working from home. And CEOs were excited by this. They felt this showed opportunity that their businesses could be agile and could then therefore look more with more emphasis on their technology strategy moving forward. All in all, we then saw many of these solutions within this RegTech arena, KYC, digital identity, remote board meeting solutions using blockchain and other tools, really see a lot of demand sort of come September last year, and that seems to be continuing into this year for their services. And in general, the fintech sector in Luxembourg has done pretty well out of it. The other big area where Luxembourg has a great deal of prominence, arguably the market leader in Europe, is in the payments sector, with all the big payments firms, Amazon Payments, PayPal, Rakuten, Alipay, etc., headquartered here, but also, other payment firms on sort of the mid-tier to lower levels all had a huge boom, obviously, in activity because nobody was paying with cash anymore. Everyone was ordering everything online. And so generally the sector performed very, very well and continues to do so. So we hope that this will continue, obviously, as we move forward and out of the crisis. Some businesses had to pivot a little bit, but in general, they performed very well. And it really aligned with the sectors that Luxembourg has looked to focus within FinTech.
Thank you, Nasser. We've seen the same, actually, the level and speed of adoption to technology has accelerated during the pandemic, and specifically for fintechs who were struggling with the proof of concepts with the financial institutions, but actually moved faster. Noha, would you be able to share the impact of the pandemic on the fintech community or sector, specifically in Egypt?
Thank you very much, Raja. Well, I would also love to refer to the changing role of the current regulators that we have here in Egypt. I mean, for years, they've always been concerned, solely focused on consumer protection or market stability. Now, the role has changed into becoming a partner for economic growth. So they are not they no longer hinder that innovation path. They are of more supportive nature. The introduction of the regulatory sandbox, amongst other regulations that we have currently in place, has pushed the growth in the sector, not just the pandemic that has helped alter the behavior, but also the sense of direction and the changing nature of the role. Definitely, the pandemic has pushed the digitization efforts amongst the incumbents, whether they're banks or insurance companies. They have represented a clear business case that change right now can be profitable. They are going to be investing money into building digital platforms, into getting rid of legacy systems, into becoming more agile when it comes to product development, execution on the ground. But the pandemic has made it clear that this is going to actually pay off on the short term due to, again, the changing consumer behavior, the lockdowns and what happened. And as well as the growth of sectors that are somehow considered new, like the e-commerce sector, for example. The growth of online shopping and e-commerce has reflected on the number of e-payment gateway providers, for example. It has increased significantly between a few that were mainly owned by banks into independent providers that has entered the market. The pandemic has also showed us that we can do business a lot more efficiently. We do not have to put in money into physical interactions with customers. We do not have to put in money into building brick and mortar networks to onboard customers to carry out the distribution part of the business. And accordingly, this has witnessed a lot of growth into startups that are actually taking care of automating that distribution segment of processes for banks as well as insurance companies in partnerships with licensed banks and insurance companies, similar to what Hemant has referred to happening in India. So, I think the pandemic has done us a great favor. I mean, the FinTech scene and ecosystem, and not just in Egypt, I believe, but around the world.
Thank you, Noha. As we go back to Joseph, someone mentioned the customer experience. I think Nasser mentioned the customer journey has changed, and we're not going back to physical branches. We're not going back to signing papers or doing any of the manual transactions anymore. How have you seen the evolution in Singapore, given that it's already at a very advanced level compared to the rest of the region in that area?
Yeah, I think not just consumers. It's just the whole future of work paradigm has changed, right? So the way corporates are exchanging information, exchanging documentation with each other, right? So on that side of things, I think there were companies that even fintech companies that had to adjust, right? So for example, there's a case study of a company that was focused on cross-border POS payments, right? When folks couldn't travel, and of course they were doing pretty well before that, right? Because they had amazing rates. During the pandemic, they had to totally adjust to focus on e-commerce, right? Because that's how everyone shops. Consumers are shopping this way. Even the way corporates are paying each other might change in that aspect as well, right? I think specifically, since there's a lot of talk on the whole blockchain cryptocurrency side of things, even as a consumer looking at personal finance, the mindset has shifted a bit, right? During the pandemic, when interest rates were dropping, people were looking at alternate sources of investments. So people are and of course with the whole DeFi infrastructure, there's just new products, right? There are platforms which allow you to margin lend. You can do staking. You can do borrowing. Of course, there's the whole push of robo advisories. So I think it's just what we've just seen is the people who did well were the people who adjusted fast, right? So for example, Singapore robo advisory like StashAway, when the interest rates from the bank would drop, they were like, hey, we also got a fixed D equivalent product, right? We're going to give you X%. This is higher than the bank. Come on board, right? Obviously, when customers come on board, even if the interest rate were to drop later, they are like, hey, transfer over to our other riskier products or portfolios, right? But because they adjusted fast, they managed to capture the market, right? And I think Singapore, we are pretty lucky to just have a lot of support from the government in just pushing this whole wave, right? Of change that's necessary. So could go on and on about just the number of incentives and schemes they have, from availing more API open platforms to just providing grant funding to businesses who require to, for example, change their payment methods. There's just a lot of support there. So yeah, I think we've been pretty fortunate, but of course there are winners and losers, right? So yeah, that's what we've seen.
Thank you, Joseph. So I have one more question, and it's open. Anyone can really answer. How can we, as global fintech hubs, I mean, we've been connected for a couple of years, and we've been sharing each other's startups and solutions and technology, and trying to create business opportunities across different regions. What are the opportunities for exporting and importing talents between those hubs to enable those startups to scale through our network? And how can we have more women in fintech? So two different questions, but I would take a view from each of you on this one. How can we enable movement of talent and growth of startups? And how can we engage more women? At the IFC, we run accelerator program. As I mentioned in the beginning, it's a female talent accelerator program, and we look at women in the financial services sector. We introduce them to the startups, to the technology, and to the innovation ecosystem, and we try to inspire them to take up roles in there and hopefully create something in fintech. And I'm really proud to say that 2 of the participants have launched their own fintechs. So don't underestimate the impact, but this is what we do. I would be really excited to learn what's happening in the other jurisdictions with regards to talent and women in fintech.
Yeah.
May I?
Yes, please.
Sure. On the first point of greater collaboration, I mean, I think that's absolutely key. You know, when we set up a loft 4 years ago, we stated from the beginning, this isn't a competition. There are certain centres, I won't name them, yes I will, my old home, London, that like to believe they're number one at everything and continue to compete to be number one at everything. And they do genuinely see it as a competition. We have worked tirelessly with centres all over the world, obviously particularly in Europe, to ensure a lot of collaboration and a close-knit community, to the extent that we apply for various projects at sort of macro level, at EU level, EC level together. We share and cross-communicate solutions between each sectors depending on the, our requirements within our own centers. We run a variety of, special days, pre-COVID anyway, we've been doing them digitally, where we have events between different centers together where we showcase ours, they showcase theirs. We've done one with you, Raja, I think, with the IFC as well. But this has actually transitioned to something a lot more official within Europe. We have something called the Talent Route. It's a dedicated association, which is a hub of hubs. And the collaboration. It has a dedicated website if you'd like to take a look. And there have been discussions with others, specifically from the US and with Asia, to expand that kind of network to really foster policy and I guess in many ways, campaigning on behalf of the global fintech community working together. Yeah, and so we'd be happy to have further discussions with all of you to build a bigger, global, more tight-knit fintech community. On the role of women in fintech, we try as much as possible, but I think it's to a degree a bigger problem. It's women in finance and women in tech. I mean, you're combining two areas which are predominantly male dominated and have been traditionally, although that's changing, and I think Luxembourg does a fantastic job around that. But it is hard, we try always, to adhere to a very simple policy, for example, of always having unilateral panels where there is at least one woman present on every panel. And we look for people from within the broad financial ecosystem to represent. But there comes a point where it's just nigh on impossible. And then, when we do have a panel discussion, say with 4 guys, we get all the complaints on social media, where's the women? And we say, look, we tried, and it is hard. It is hard. I've had the experience both, as I said, running the loft, looking across an ecosystem, but also running my own companies and startups. It is very hard in fintech. But we can only continue.
As hard here in the IFC or in our region. So Nasser, whenever you need, I have access.
You help us out then. Yeah.
Who are shaping the financial services sector, and we'd be more than happy to connect you. Would anyone else like to answer the question?
Oops.
Go ahead. No, go ahead, please.
Well, I would start with the ladies part of how can we increase the number of ladies in fintech. I would definitely second Nasir's input regarding that we need to start looking at the financial industry and the tech industries, because again, fintech is a mix of both. To find a lady who's done, who's had a career in financial industry with the understanding of technology, or a lady who's had a career in technology with the understanding of financial industry, to actually be able to put together a viable fintech business model that can grow and be sustainable is really challenging. How can we overcome that? Well, it requires a strategy, as in a national or international strategy, to work on early stage education, to work on cultural and mindset shifting, to encourage girls to go into STEM, to encourage families to support their girls who wish to go into STEM. It takes a lot of I wouldn't call it regulations, but at least directive. I mean, there are a couple of initiatives that were taken here in the country to ensure, for example, that ladies are represented fairly on the boards of financial service providers. It was a directive that was issued by a regulator. Prior to that, only ladies who really stand out and had really amazing careers and who'd really worked on building that image and the brand for themselves. And unfortunately, ladies, naturally, we are not into, I mean, we do not show off. We do not put in the time into networking or building a brand similar to what most men do comfortably. I mean, we can do it, but it takes a lot of effort and it's not our comfort zone. That's the point. So there is no short answer to that, Raja, but there are definitely...
I think there is a lot that can be done on mentorship and coaching and career advising. So we don't need for the regulation to happen, but we can coach and support. And as I mentioned, our program, 2 ladies from financial services actually launched their own FinTech. So if I see it happen here, I'm sure it can happen anywhere else. Thank you, Nuha. I think Paddy had comments.
Yeah, I think I agree with what's been said, Raja. I think education, cultural kind of aspects. We talk about kind of inclusive innovation at iValley, and it's kind of broadening the appeal of a startup and innovation, economy, entrepreneurship to broader segments that have not been touched, and women is a big part of it. But the minorities, kind of veterans, we talk about elite athletes, they kind of do second careers, special needs individuals who kind of think differently, neurodiversity. So we kind of talk about it broadly. But on the women front, I'd like to kind of echo, I think Sally Krawcheck, if you know her, she was in Wall Street during 2008, the crisis. She founded since then Elevest, which kind of promotes women in finance, not so much fintech. Kind of in the wealth management space and stuff. So she said it well, that I think you have to come at it from a position of strength, right? Every individual is an individual with that brings something to the table. And if you can articulate that strength, rather than, okay, you obviously have some weakness because you are this other segment that's typically not included, that kind of comes at, it gives you kind of a position of weakness, but you have to come what you bring to the table, what are the unique skills. And we kind of talk about that quite a bit, right? The neurodiversity example is classic. Special needs kids, they bring like unique ways of thinking. They're good innovators. They think about the future and things. So you have to give them opportunities like that. So similarly, we kind of use that on innovation. I have some thoughts on your first question as well, but I'll pause. Maybe we'll kind of close on the women topic first, and then maybe I'll get to that, Raja.
Thank you, Paddy. Actually, I was thinking to jump to another question since we have only 10 minutes left on the panel. Who's winning the race to fintech? Is it super apps or big techs? Anyone can answer.
Big techs all the way. They have what it takes. I mean, look at it. In order to build a successful, scalable fintech business, you need data, customer base, and straight through easy customer experience. Those 3 things are mainly the pillars of success that all large techs possess. Just imagine the hundreds of millions of people who have presence on Facebook, who are very acquainted with the customer experience, who can navigate around the platform easily. All Facebook has to do is, and again, all the small businesses and merchants that Facebook supports, all Facebook has to do is mainly add a button says, do you want to finance your purchase? Click yes, and it's done.
So Nuha, why didn't they do it yet?
Oh, okay. That's a very important question. Why didn't they do it yet? I'm 100% certain that they have a plan. Those who haven't attempted it yet, the plan is there. Those who have already started are going to gain momentum and growth in the market share really quickly. The competition to the large techs is absolutely non-existent. If you look at banks, even regional banks, they have failed to serve 90% of the population ever since the banking and financial industry has started. We've always, and again, I'm wearing the banker's hat right now. We were happily serving 1-2% of the population, like creme de la creme of society, the executives, and like offering them our services and solutions. We never took the time to actually understand the needs of other market segments. We never took the time or invested in developing solutions that matches their lifestyles. Profitability, and I'm not saying as a profitability as I'm proposing that we run non-profitable models. What I meant was the easy way into profitability, serving customers with profit margins that thick in comparison to serving customers with thin profit margins, but with a more a possibility and opportunity to scale and grow. I mean, there's absolutely no competition. No matter how hard banks try to catch up, work on their digitization, work on their customer strategy, they should have done that 20 years ago. Of course, they did not attempt to do that. Now, is it too late? Yeah, I do believe it is too late. Fintechs may have a better chance. Banks partnering with fintechs may stand an opportunity, but definitely there are big techs.
Thank you, Noha. I would be curious to hear a contradictive opinion. Nasser.
None of the big techs are interested in becoming a bank. The furthest they'll go is get a payments license, which they all have. Nearly all of them have it in Luxembourg. And the reason for that is quite simple. They are very scared with all the focus they already have in the US and in Europe on their monopolies that they all run in their particular verticals. They are even more scared than they were 5-10 years ago. My thesis 10 years ago at business school was the feasibility of Google Bank, and I worked with Google on it. And the conclusion is very simple. Getting a banking license with all the scrutiny that comes with it and the potential that how that could damage and morph into their core business is way, way too scary for any of them. What they will do, and this is the part I will agree with Noah, is look to act as distributors for financial services, because they're all selling services and products. I mean, Amazon's the most obvious. You now buy insurance as part of the purchase. They already run payments. Their loan book, because you can lend at point of sale, so installment lending at point of sale, which they do out of Luxembourg for the whole of the European region, has grown from 0 to 8 billion in about 5 years, right? So yes, they can compete, but there will be limits to it, because I'm telling you with a great deal of certainty, they are not interested in going and becoming banks, because the regulatory oversight and burden is way too much to bear.
I agree with you,
Nasser. No need to obtain banking licenses, and there's absolutely no need to become a bank. Again, they are only focused on 1 or 2 services and interested in 1 or 2 services that banks are offering. And this is where they have the competitive edge. If we look into what is happening right now with the buy now, pay later,
yes.
market and its growth. If we look at embedded finance, which is the future of the financial industry, they have a huge potential, and they definitely represent themselves as the competitor with the upper hand.
Yes, so distribution.
Thank you. Thank you, Nasser and Noha. Does anyone else want to add to this point before we wrap up? Hamad?
Yeah, go ahead.
Yeah, Paddy.
Oh, so I wanted to also maybe talk about decentralization, or the multi-network, multi-form factor internet that we're getting into, right? Meaning Bitcoin's a bad example, but it is $1 trillion kind of market cap, right? And it just came about in 10 years, and it's not big tech. It is not a challenger app. So what is it? It is a network, right? And we'll see likely more networks. So if we talk about the Web 3.0, right? So the Web 1.0 was kind of read-only informational. 2.0 maybe digital, open kind of connected platforms and things. We believe there will be like these multi-networks, like Bitcoin being one, ETH, others, right? Maybe banking, stablecoin, CBDCs networks, and other thing, where the currency, not just the value currency, but the things are tokenized. So that we believe will give rise to other platforms, kind of more the decentralized platforms. And this is not like next year, we're kind of talking the next decade. So I think that's to be seen who wins that race. So obviously we have a few players that are doing well, and there's some of these players don't have ownership structures, like the Bitcoin's a classic example, and the value is divided in the network. So we're very bullish on kind of how the decentralized internet or the decentralized web evolves, and I think there's a great opportunity for global innovation in that.
Thank you, Paddy. Hemant, did you want to add?
Yeah, I think it is very, very market dependent, because if you look at Southeast Asia, super apps have been very, very successful in China. If you look at Gojek and all these players, right? But if you come to India, neither big techs nor super apps have worked out for anyone. So because it is very, very local dependent. I think it has always been a cycle. There will be a unbundling when the incumbents have become comfortable, and then once there are too many players, there will be a bundling. So it's a cycle. It depends upon where you are in that cycle to say who is succeeding, who is not succeeding.
Thank you so much, Hemant, for your feedback. I would like to take a moment to thank all of our panelists, first of all, for joining us today, for continuing to work with us into shaping the fintech industry across the world. We appreciate your time and your insights and our relationship. Thank you for joining us today, and we look forward to hosting you in the future.